makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Joanna Bersecci in Dubai, filling in for Francine Lacqua this week. Now, President Trump says he is prepared for a legal fight with the Fed Governor Lisa Cook. That's after he moved to oust her from her post following allegations that she falsified mortgage documents. Bloomberg's Anne-Marie Hordern asked the president about the legal battle ahead.
Fed Governor Lisa Cook, her lawyer, has said that they're going to be filing a lawsuit challenging this legal action. What is your response? Are you prepared for a legal fight?
She seems to have had an infraction, and she can't have an infraction, especially that infraction, because she's in charge of, if you think about it, mortgages, and we need people that are 100% above board, and it doesn't seem like she was.
Joining me now is our chief Asia correspondent, Rosalind Matheson. So super timely question from Anne-Marie to President Trump regarding the future of Lisa Cook. How is this all going to play out? How is this legal battle likely to play out between President Trump, the Trump administration, and Lisa Cook and her lawyers?
Well, as you were hearing from her lawyers, they plan to file a lawsuit against this. And what that's going to look like initially is probably an injunction just to call a halt to efforts to fire her while this litigation plays out. It's worth noting, of course, that no charges have actually been filed against her, although there is the hint of a DOJ investigation. She denies any wrongdoing in these allegations that have been made against her about her mortgages. But this could play out, for quite a while in the legal sphere, and potentially with ramifications beyond just her own case, especially if it gets to the Supreme Court. And the idea of what is the view of the Supreme Court with institutions in the US and the ability to fire people for cause, and what does cause look like, and what are the protections for some people who are appointed to these institutions. So obviously very important for her own case, but possibly very important for many other officials in the US administration. And so we could see a bit of a protracted legal case going on here. As we heard, Donald Trump says he'll abide by the court decision, but he's prepared to continue either way. The Fed itself saying also they'll abide by any legal decision, but interestingly in their statement yesterday noting that long tenures at the Fed, the appointment process is designed to ensure, in a way, Fed independence, that they can make their decisions based purely on the economic circumstances for the best of the US people. So a bit of a nudge there from the Fed in their statement. The question is, does an injunction come as soon as today? And then how many weeks or months are we looking at for the legal process?
Yeah. And then also another Bloomberg story that we have up this morning about the president also looking to exercise potentially further influence over the selection of the regional presidents as well. So it's creeping. But let's also go back to one of the big stories today as well, which is that those 50% higher tariff rates have now been applied to India. How much of a blow is this going to constitute for the Indian economy, Roz?
Well, India is a largely domestic consumption story for its economy, but the US is its biggest export market. And obviously, this is going to be a blow to many labor-intensive sectors, particularly of the economy, including jewelry, for example, textiles. Some sectors are protected, like chips for so on, but it will hit some of those labor-intensive parts of the market. And so we could see an impact on India's economy from there. But also there are lots of knock-on effects from this. Even if this issue is resolved fairly soon, although it doesn't seem that it's going to happen immediately, even if it does get resolved, tariffs come back down. If you're a company who's been looking to shift your production, say, from China elsewhere, maybe to India, do you now reconsider? If you're a factory already operating in India looking to ramp up production, do you now slow those plans down? So there could be a lot of knock-on effects on the Indian economy that, about business decisions, locations, expansion, and so on that will come out of this. And there's also the really big knock-on effect, which is on the US-India relationship. I mean, obviously, this has been a blow to the Indian leader Narendra Modi. His status at home. Does he recalibrate his relationships away from the US? And that could be a very long-standing change for India that goes beyond any kind of impact on the economy in the short term.
Yeah, well, we're going to unpack all of this later with a guest on our show. For now, our chief Asia correspondent, Rosalind Matheson, thank you so much. Well, on to the other big event of today. Nvidia is set to deliver a highly anticipated earnings report today, giving an update on the artificial intelligence spending boom. Analysts estimate that the biggest buyers of AI hardware are still investing heavily in new gear. However, dimming the excitement is confusion over how much business Nvidia will be actually able to do in China. So let's bring in Robert Lee from Bloomberg Intelligence in Hong Kong. Just looking at Nvidia pre-market, it seemed to open up marginally higher, up 0.5%. I guess the calm before the storm, because the earnings report hits later today. What's on slate? What are you watching out for? And how much of a driver do you think Nvidia's commentary around China is going to be?
Okay, well, I think you said it in your prelude, a highly anticipated set of results, but probably we say that every quarterly results for Nvidia. Yet again, the stock is trading very close to an all-time high. And as you said, in the pre-market, it's sort of trading up. So I think that indicates a very high level of expectation baked in. Some significant expectations out there in the market. So for us to avoid the inevitable profit taking, which is something we typically see post results with Nvidia, the company really needs to either deliver a major surprise in reported numbers or guidance, simply put. But as you said again in your prelude, the H20, which is the specific chip that President Trump more recently allowed the company to continue exporting into China. I think a lot of the discussion and the debate is clearly going to be about that.
Yeah, most definitely. A lot of focus on that H20 chip, margins as well. But look, let's broaden it out a little bit. Last week, the CEO of OpenAI, Sam Altman, started to warn that maybe AI is entering into bubble territory. It feels as though there are some out there turning a bit more cautious on valuations at this juncture. Have we reached peak AI euphoria?
Right. Well, I would say there have been a number of external factors that have driven sentiment in NASDAQ and the US markets recently, and the main one being, expectations on Fed rate cuts. So not necessarily driven by any, additional positivity on the fundamental outlook. And contrary to that, as you mentioned, Sam Altman has made statements about the sector being in potential bubble territory. I think many people would potentially agree with that. And there was also an MIT report out of the States, I think about a week ago, which again, based on a survey of US companies they'd done, only I think 5% were making any real return on their investment in AI. 95% were making no return whatsoever. And this is a point that we have come back to again and again at Bloomberg Intelligence within a China context. Whilst, it's the companies providing the infrastructure, the chips, the cloud computing services, which are being used to train these models, to develop new apps, it's the infrastructure providers that are making the money at the moment, to state the obvious. But at the end of the day, the software companies cannot continue to spend billions or tens of billions on CapEx if they have no visibility on making a commercial return. So I think increasingly the market is rightfully focused on the outlook for monetization within the sector, because it makes no economic sense whatsoever. I'm not picking on Microsoft, but for Microsoft to be spending something like 85 billion on CapEx this year, again, if there isn't a return on investment in the foreseeable future. So the monetization argument, return on investment are the key issues that investors in the AI sector need to continue to focus on.
Wow, that 5% number that you mentioned really stood out to me. Robert Lee from Bloomberg Intelligence, thank you so much for the preview into Nvidia. It's going to be an important driver of sentiment later. All right, for more on the markets, joining me now is Maya Bhandari, the EMEA CIO for multi-asset at Neuberger, Berman. Maya, there's so much to discuss, and we'll talk about market valuations, but I just want to maybe start with the big topic of the last couple of days, which is the moves out of the Trump administration, out of President Trump, to perhaps infringe on the Fed's central bank independence, targeting Lisa Cook, our own story overnight, saying that he's looking to exert more influence over the appointment of some of these regional presidents as well. How do you think all of this is going to play out in terms of premium and the extra risk premium that U.S. investors are going to look for in some of these financial assets?
Thanks, Jemana, and good morning. Yeah, the prospective firing of the Fed's cook would be the first time in over a century we've seen something like that happen. And I think, as you covered off in your reel a moment ago, seems likely to be challenged legally by Cook's legal team. I'd say, in the big picture, uncertainty prevails, and the question of Fed independence is very real. Should the termination stand, for example, Trump would be able to appoint another governor and would have therefore appointed 4 of the 7 board seats. There's also the question around the regional banks, which is of course important because 5 of the 12 regional bank presidents sit on the FOMC, and every 5 years these 12 regional banks come up for approval, and that's happening in the first quarter of next year. So there are some fairly significant potential shifts happening under the hood at the Fed. I think it's important to say before we talk about markets that while this could reshape, the FOMC more broadly, I don't think it shifts necessarily the near-term balance on rate cuts. Cook herself is a dove, so it doesn't really shift the balance on rate cuts per se. But what we have seen, I think, from markets has been, of course, a weaker dollar, a stronger gold, but the real action has been in bonds and long-dated yields moving higher with considerably steeper curves as short rates have fallen. So, the US 30 years back around 495. It's a whisker from 5%. The parts of the curve that most of us have been watching, the 10s, 30s, the 530s are all the steepest since 2021.
Yeah.
And things like the US 2-year inflation is at 3.05. That's the highest since late 22, when we had a very different setup, of course, with the Fed hiking aggressively, inflation above 6%. So I think bonds have reacted quite strongly, and those moves to us look justified.
Yeah. Okay, so let me pick up on since you've mentioned the move in fixed income. There seems to be a disparity between what fixed income markets are pricing in right now, which is somewhat of a stagflationary scenario, a slowdown of the U.S. economy combined with potentially higher inflation down the track, versus what is being priced into equity markets, which is, good old days, Goldilocks, very strong corporate earnings. Which one of these narratives is correct?
Yeah, I think that's a great question, and it's something we've been writing about and talking about it quite a lot at Neuberger, Berman, because I'd say big picture, one of the striking discrepancies in risk premia that actually has persisted since just before Liberation Day, since the 1st of April, has been this disparity between fixed income, particularly long duration government bonds and equity markets. As you say, fixed income, and we just talked about the moves at the long end of the US bake in increasing caution. Equities appear to reflect growing optimism, and I think what's been interesting, particularly through the last few weeks of earnings, but also the macro data, that each of these opposing moves, if you will, have garnered support in recent weeks. Bond markets from some of the policy fears we've just been talking about, and equities from remarkably strong earnings. Now, what we've been doing with this is really taking a barbelled approach, if you will. In corners of fixed income that perhaps overcompensate for the risks around growth and inflation, areas like the U.S. TIPS curve, the belly of the inflation-protected curve, U.S. investment-grade credit bonds, emerging market local bonds. We've been leaning in. And we've also been taking advantage of some areas of equity markets, U.S. tech, for example, where I think you were talking just a moment ago around Nvidia, exceptionally strong earnings that we wanted exposure to, but also areas like Europe, Japan, and parts of emerging markets. Europe and Japan, key sectors like banks, we think look pretty good here, and so we've had some exposure. There.
Maya, let me bring it back to what you were saying about equities versus fixed income. This phenomenon of perhaps the two different instruments signaling a different type of economy. Is that true also in overseas markets as well? Do you see this very tight equity risk premium versus a higher bond risk premium being played out, for example, in Europe?
I mean, I think we see the higher bond risk premium more broadly. I mean, we can talk about France if you like, but there have been things this side of the pond as well that have driven fixed income premium. By fixed income premium, I mean duration premium, because of course, when we look at spreads, they're very tight. So I think the fixed income side of things, the government bond side of things, has been quite similar. Of course, the difference has been on the equity side, where equity risk premium is very tight in the US, very much led by some of those tech stocks or the Mag 7 stocks. In Europe, we've seen less of that, and so when you compare the very big picture equity risk premium versus fixed income risk premium, the disconnect looks a bit less intense in Europe, for example, than it does in the US. But there is this disconnect, which I think is an important point to make.
Yeah. Very valid observation. Maya Bhandari, always good to talk to you. Thanks so much for coming on the show. EMEA CIO for multi-asset strategies at Neuberger, Berman. And coming up, President Trump's crushing 50% tariff on some Indian goods takes effect. We speak to Shumita Deveshwar, the chief India economist at TS Lombard next. This is Bloomberg. The U.S. has slapped a crushing 50% tariff on some Indian goods. The higher tariffs doubling the existing 25% duty that was implemented on August the 7th. Joining me now is Shumita Deveshwar, chief India economist at TS Lombard. Good morning to you, Shumita. Well, this 50% tariff rate sounds like a very high number, and indeed it is the highest tariff rate applied to any Asian economy. And yet, a lot of the growth in India is still driven by domestic demand, about 60% of the economy from what I've read. So how much of an actual economic impact are these higher tariff rates going to have on the Indian outlook?
In terms of the overall impact, it's actually quite less. We're estimating around 0.5 to 0.8% of GDP. But given that India's economy is still in a revival phase where private investment hasn't really picked up, urban consumption has been a bit of a worry. And over the longer term, manufacturing as part of GDP has just stagnated. This is quite a big worry because the US is, after all, India's largest export market.
Yeah. So the reason that these tariffs have doubled from 25% to 50% is because President Trump is unhappy with India buying or continuing to buy Russian oil. And the latest numbers suggest that India continues to import about 1.5 million barrels per day. The Prime Minister is pretty defiant. There are no signs that they're looking to find alternative sources. But should they decide to go down that route, how feasible is it really for India to find alternative sources of energy?
As such, just about 4 years ago, Russia was a tiny percentage. I mean, the Russian oil was a tiny percentage of India's oil import basket. So it isn't that difficult to gradually reverse the dependence that India has now on Russian oil, which now makes up about 35% of India's import basket. There's been a rapid escalation in Russian oil imports over the last few years. The point really here is that Prime Minister Modi can't really be seen to be buckling down under external pressure. And the more public that this is made, that these tariffs are being imposed as a punishment on India, to India for the Russian oil imports, the harder it's going to get to reverse. So I think that right now, both sides are really digging their heels in. This also comes in the backdrop of trade negotiations that have stalled because the US wanted greater access to India's farm and dairy markets. And that's a sector that the government will not open up for the US because it needs to protect its farmers. Yeah. That's what it does. So all this comes in that backdrop. So I think there are two things over here. One is that the trade negotiations continue, which seem to have stalled right now. There was a US delegation that was expected to come to India at the end of August, and they've postponed that visit. And the second is what happens with Russia and Ukraine, at that level, that if things settle down over there, if there's a truce, then this 25% as far as the Russian oil penalty is concerned goes. But I don't think that India is going to publicly say, oh, because of US pressure, we're going to stop buying Russian oil.
Yeah, okay. So given you describe an approximate, let's say 0.5% hit to GDP, what are the options policymakers have to help shore up growth and help the parts of the economy that have been hit the most? And how does the recent reform momentum play into that?
Exactly. We've always said that India reforms when its back is up against the wall, and it really seems to be an instance of that. These are long pending reforms that the Prime Minister has announced in terms of the GST reforms, just rationalizing the tax system, making it easier to do business. These are things that have been continuing at a very slow pace. And the recent announcements that the Prime Minister has made as far as the taxation policy is concerned is seen as rekindling that reform momentum, which had been waning quite significantly since actually Modi's second term. So this is a positive move, because we do need to, whether the US pressure was there or not, the basic truth is that we need to reform and we need to increase the pace of implementation of reforms. If India has even the aspirations of growing at 8%, whether the US is part of that, the US export market is part of that strategy or not.
Yeah.
So I think it's a very positive move, and will hopefully to some extent offset the economic damage. As well as keep investors enthused about India, that things are moving, the reforms are happening.
Yeah. Quick final question from me. Does this constitute irrevocable damage to the US-India relationship?
I think at the headline level, that is what is being made. But as I mentioned earlier on also, that as long as the trade negotiations continue, as long as there is some movement forward, I think that actually the positive thing is that India has really adopted a conciliatory tone. We've been trying to talk. We've been saying that, look, we can't do everything on your terms. We need to protect our farmers. There's certain sectors that we need to be protective about. So as long as that is, the talks continue, I think that's positive. There is, of course, a lot of turmoil all over the world. But I think that as long as India, maintains a balanced tone,
Shumita,
I still see hope.
We're going to leave it there. Yeah, thank you so much. Shumita Deveshwar, Chief India Economist at TS Lombard. Thanks for joining us. Well, coming up, we're going to be talking about French assets, which have continued to wobble, though stabilizing today after Prime Minister Bayrou called a confidence vote. We'll have the details next. Good morning and welcome to The Pulse. I'm Joanna Bersetchi in Dubai, and these are your top stories. President Trump says he is ready for a legal fight with Fed Governor Lisa Cook after she rejects his moves to remove her. Investors brace for results from the world's most valuable company. Nvidia's earnings a key test of Wall Street's faith in the AI boom. Plus, a crushing 50% U.S. tariff on Indian goods takes effect to punish the country for buying Russian oil. And over in Europe, French assets have recovered somewhat after recent struggles as the latest bout of political instability endangers the nation's nascent economic recovery. This after Prime Minister Bayrou called a confidence vote that could topple the government. Let's get more with Bloomberg's Caroline Conan in Paris. So, Caroline, this came as a bit of a shock to markets yesterday, judging by the market reaction. Has there been any progress, any developments on the political front in the last 24 hours that could perhaps move things in favor of Bayrou?
No, we are slightly seeing a recovery on the markets today after 2 days of losses on the CAC 40, but we're not really seeing any progress on the political front at this stage. We still have the Socialist Party saying they will vote against confidence of François Bayrou. And without them, really, mathematically, it's clearly almost impossible for François Bayrou to survive this vote of confidence on September 8th. So the likelihood of his government to fall is still pretty high. He's going to speak at the MEDEF University, which is France's biggest business lobby, tomorrow, and he's going to try again to do his charm offensive to try and convince executives that his budget plans are the best way for France. But even the MEDEF head who was speaking on French media this morning was actually saying that he is against himself the idea of scrapping 2 bank holidays, that it is not fair to ask French people to work 2 extra days without being paid anymore. So at this stage, I would say that if François Bayrou survives on September 8th, it is clearly a miracle, unless, of course, the socialists backtrack. They are supposed to present an alternative budget over the weekend.
Okay, so let's say he loses the confidence vote. Then the question becomes, what's next? And for investors in French assets, how much is it really going to change the status quo? Because France is already on a fiscal consolidation path.
That's right. And in fact, this question of what's next is what is on everybody's mind in the political spectrum and among the market participants at this stage. We heard from Carmignac, for example, saying that if the political situation in France doesn't improve, then the spread between the French and the German 10-year bonds could actually increase from around 80 basis points, already pretty high today, to about 100 basis points. So clearly we should see more pressure on French bonds. The question of what's next, of course, we've heard from the National Rally saying they are calling for new snap legislative elections because that's something that President Macron could possibly call. It's been more than a year since the last snap elections in July 2024. And Gabriel Attal, the former Prime Minister and the head of Macron's MPs in the National Assembly, actually saying just this morning that he doesn't believe that new snap elections are the way to go, that if the problem cannot be solved by the National Assembly, even with a new fragmented parliament, the problems are going to remain the same. The fiscal path of France is going to remain challenging, and the French deficit is still expected to be above 5% this year, and is not expected to go down unless there are all these savings proposed by the current government.
Yeah. Meanwhile, fixed income investors very focused on 10-year OAT versus 10-year BTP. Let's see if 10-year OAT yields overtake. Bloomberg's Caroline Conat in Paris. Thank you so much. Now, former UK Prime Minister Liz Truss says the country's economy is in a doom loop cycle of higher taxes, lower growth, and higher debt. Speaking on Bloomberg's Odd Lots podcast, Truss also weighed in on the Bank of England and backed Donald Trump's approach to the Fed.
I think the Bank of England needs to be accountable to politicians. I think the current system doesn't work. This is why I'm very sympathetic to what Donald Trump is saying about the Fed. Monetary policy is incredibly important. It determines the allocation of assets within society. What we've seen in Britain is we've seen people who have property, who have capital, have done very well out of the low interest rates that the Bank of England and the easy money the Bank of England has created over the past 15 years.
And you can listen to the full interview with former UK Prime Minister Liz Truss on Bloomberg's Odd Lots podcast with Joe Weisenthal and Tracy Alloway. Well, some fund managers say returns on emerging market assets are set to power ahead of their developed peers. They've moved in lockstep since President Trump unleashed his tariff blitz in April. Analysts say the prospect of more Fed policy easing, a pivot away from U.S. investments, and more conservative fiscal policies in emerging nations are likely to drive that outperformance. Let's discuss the outlook with Alan Siow, a co-head of emerging markets corporate debt at 91. Good to have you with us. Interesting to talk about more fiscal consolidation taking place in emerging market economies versus DM economies these days. Who would have thought? That's the new paradigm. Let me just start off, though, with the here and the now, which is the more dovish tone that the Fed Chair Jerome Powell took at Jackson Hole. How much of a potential tailwind could that be for broader EM assets around the world, and the fact that the Fed is turning more dovish?
A pleasure to be with you, Jumana. Just on that point, I think a dovish Fed is unmitigatedly a positive for EM in two ways. One, if that dovishness leads to a more moderation in the US dollar, a weaker dollar is bullish for EM more broadly. A lot of EM risk assets, including the corporate credit asset class and emerging market external sovereign bonds, they benefit from Fed easing, just as all developed market fixed income assets do. So that environment, which is one where EM economies have been navigating this intense sort of geopolitical environment with aplomb, having had their crisis already, if you like. I think this sets us up for a good period.
Yeah, so you're an emerging market specialist, so you understand the playbook better than anyone else of what happens when the government tries to intervene or exert pressure on the central bank. There are cases of Argentina, Turkey that we can speak to. What do you see happening in the U.S. if this move out of the Trump administration to interfere more with Fed policymaking continues?
We are in an unprecedented time. I think we've for a long time had this label of emerging and developed markets. And I think maybe right now we need a new phrase for this. Maybe the right word is converging markets. So we're seeing a lot of the, if you like, tenets of free markets and capitalism being, if you like, re-examined, reconsidered. One of the key pillars of that is the independence of the central bank. I think within EM, speaking from our own experience, we've seen many episodes where that independence is challenged. It usually leads to a period where, certainly risk premia rise and uncertainty rises. I think, it's in the long arc of history, we think that the principles of that independence are well understood. And then, we, can't really comment about what that means for the US, but it certainly is echoing in, let's say, an uncomfortable way for those of us who have spent a lot of time in EM looking at that and saying, I thought this, wasn't really something you'd see in this part of the market.
Yeah, I've seen this story play out before, all of the EM investors are saying. Speaking of some of these EM economies, today, earlier on the show, we were talking about the 50% tariff rate that's now being applied on Indian exports to the US. How have some of the largest EM economies, the Asian economies, helped or managed to deal with the impact of the tariffs that the US have imposed? Have they been more resilient than you expected?
Yeah, I think the important thing here is to take a step back and consider that emerging markets are, broadly speaking, 84, 85 countries. So you have a much more diverse universe to pick and choose from. While it is true that some countries have fallen under the spotlight, such as Brazil, such as India most lately, certain other countries, for example, China and Mexico, have dealt with those tariffs both now and in the previous Trump administration with more aplomb. So leaving aside the immediacy of the headlines and the way that risk assets can sometimes overreact, in the end, I think a lot of the devil is in the detail, and when that implementation happens, it's often not as bad as we seem. It may seem at first go. The second is that there are many, many EM economies, and some of the more recent joiners to the EM universe, such as countries in the Middle East like the MENA, GCC, or even Saudi, which are currently in that 10% basic camp of tariffs, which is affecting more broadly the developed world. So I think in EM, it's, you definitely have a lot of dispersion, a lot of opportunities to pick and choose, and there will be winners and relative losers in that as well.
Yeah, so let's talk about the winners and the relative losers. Yesterday on the show, we did a whole segment about global credit spreads and how historically tight they are. I mean, in some cases, you have to go all the way back to 1995 for U.S. investment grade to get to this level of credit tightness. So where do you find opportunities in an environment like this? And are you nervous about how tight some of these credit spreads are trading, given the uncertainties that are yet to come in the next few months?
That's a great question, Jumana. I think, like many other fixed income managers, it's very difficult for us to make a strong case for spreads because mathematically, just looking at their history, we are at all-time tights for many asset classes. What gives us comfort in emerging markets is that relative valuation gap between us and our developed market peers remains very much intact. So when you condition that risk by bucket, so for example, if we look at the same ratings, at the same duration. You're getting more spread, more yield in many emerging market locations, particularly, let's say, within the corporate credit asset class. And second, if you look at wider credit metrics like spread per turn of leverage or EBITDA, debt to EBITDA metrics, emerging market corporates remain very attractive. Fundamentally, they're very sound. I think what belies this, the peak in spreads is that yields are very attractive for the current setup. So at 5.5% for emerging market corporate investment grade credit, and 8% for emerging market high yield corporate credit, and 6.5% for the blend. This is a very attractive investment destination, given the global context where everything is expensive, everything is tight. And so in that context, against that global growth outlook and fears on global inflation, I think we're in a good place.
Yeah, so all-in yield is what you're looking at. Okay, final question, because we've been talking about the steepening of the U.S. yield curve. Are you hedging against your longer duration exposure in the portfolio to account for that steepening of the U.S. yield curve?
This is a big discussion we've been having on Invest and also with our clients, because the behavior of let's say U.S. Treasuries has changed a number of times during the current year. So the regime under which it operates has also been called into question. So in prior periods of crisis, being long U.S. duration has been a safe haven. It's been actually a portfolio hedge for a risky asset class like ours. However, in the most recent period of distress, let's say on Liberation Day in early April, we saw a synchronized sell-off both in treasuries as well as the dollar, at least briefly. And so that's what gives us pause. We're trying to, sort of establish what the reaction function of these so-called hedges are, depending on the source of that next crisis. So if the catalyst is, for example, let's say an attack on Fed independence, then that hedge might not work the way we expect. And so that's what we've been spending a lot of time trying to understand.
Yeah, it's not an easy environment, is it? Alan Siow, thank you so much. Really good to chat to you. Co-head of Emerging Markets Corporate Debt at 91. Well, Bloomberg Analysis has found that Chinese President Xi Jinping has ousted almost a fifth of the generals whom he personally appointed since taking power in 2012. For today's Bloomberg Big Take, our senior editor Richard Frost joins me from Hong Kong. So this is quite a significant number. 20% of these military officials have been purged, disappeared, missing. What is behind the purge?
Yes, and let's not forget these are generals that Xi Jinping himself appointed. In terms of exactly why these generals have disappeared, China is usually fairly opaque about that. It's typically related to corruption, but just to give one example, the second highest ranking military officer, a man called He Weidong, the world only learned that he had disappeared because he didn't turn up for an annual tree planting ceremony that all the most senior generals did. That was back in April. But this has been something that has really characterized Xi Jinping's presidency. The previous two Chinese presidents didn't investigate any generals. So there's obviously something that he's worried about, and whether it's corruption or power, it's not quite clear. Yeah.
So Xi is currently serving his third term in office and possibly preparing for a fourth term. Is there any talk about who his potential successor could be? And do these moves actually, lay the groundwork for further insights into who he may be looking to choose as his successor?
Sure, you're asking some pretty big questions here. There is absolutely no sign of a successor right now for Xi Jinping. And there is a very powerful military commission, which he is head of. And in fact, there's normally 7 sit on that, typically generals. There's only 4 because some of them have been taken out, presumably by Xi. And it's through that path that previous presidents of China have come. So were there to be someone unexpected go into there, that might be a way. The Communist Party has its 4th plenum, this big meeting coming up later next month, where they map out the next 5 years economic plan, and also they sort of move personnel around. So that would be the next possible opportunity to find out whether there might be a potential successor. But right now, there's little sign that he's looking at doing that.
Okay, maybe this is an obvious question, but given he's purged about 20% of the military generals, is that going to have any knock-on effects on China's military preparedness? Does it follow through militarily?
Yeah, I don't know if that's an obvious question, because it's not entirely clear why he is doing this, and obviously it doesn't look great for a military's preparedness if the most senior generals keep getting taken out, particularly those that he had recently appointed. Exactly what he's concerned about, maybe it's the scale of corruption in the military, and that he's worried that the military, which, let's face it, hasn't fought in any conflict since the 1970s, isn't tested and isn't ready for any broader war, whether it's an invasion of Taiwan or just defending itself against something else. The sort of, I guess, the positive angle would be that by rooting out corruption, he makes the military more efficient and improves it. The concern is, particularly I would think amongst the more senior military officials, is that the fear of being taken out means that if they are aware of any shortcomings or defects in equipment, they're unlikely to come clean about it. In fact, they're more likely to hide it because they don't want to be ousted or investigated for corruption. So, like much of China's governance, when it's at that level, is quite opaque.
Yeah, fascinating insight. Bloomberg's Richard Frost, and would highly recommend reading the full Big Take today on the Terminal. Well, coming up, we have a hot story for you when it comes to cooling the summer commute. London is lagging behind other global cities. We'll bring you the data next. This is Bloomberg. Welcome back. Well, when summer arrives, office workers often complain about how hot it can be on public transport. A Bloomberg comparison of 5 global financial centers shows sweaty commuters in the UK capital have a right to feel jealous of some other cities. Bloomberg's weather and climate reporter Joe Wirtz has more on our hot data story. Joe, I've got to say, I was in London around the time of the heat wave in the summer. The tube, the underground, was absolutely sweltering. How does London and the London commute compare to other major cities around the world at peak summer time?
Boy, you got an experience a lot of folks here have to suffer through every day. Yeah, look, summers in the UK are getting super hot. We are on track right now, according to the UK Met Office, for probably the hottest summer on record. We're tracking as hot as it's ever been, and this is something cities around the world are having to deal with. Hotter summers, longer duration heat waves, more extreme temperatures, the highs getting higher, the length of these hot spells lasting longer. But, you know, cities that have transport have dealt with this in very different ways. And the experience of those commutes is quite a bit different in different places.
Yeah, I mean, one of the issues with the London Underground is some of the older infrastructures, like quite literally creaking infrastructure. So what options do cities like London have in trying to adapt if they can't install air conditioning?
Yeah, and that's a really, really great point. If you look at the subway commute in Tokyo, in Beijing, you know, they've got, you know, air-conditioned subway carriages. They've got air-conditioned platforms. They're able to blow in this sort of refrigerated air. It's not quite air conditioning, but it manages to bring down the temperature a little bit. And, you know, in Beijing, they have subway carriages that are even colder for business people that have to wear jackets and suits or tights and you know, more formal business attire every day. But a lot of those systems, as you hinted at, were built, you know, in the last several decades, not a century ago, like London's Underground, or a century ago, like parts of the Paris Metro. And we see these subway systems in these cities with the really old, and in many cases deep, narrow tunnels that were built a century ago, really Victorian era architecture in these places, really struggling to add air conditioning and to keep those systems cool. And that's increasing as it gets hot and gets hotter outside. But also these subway systems themselves add heat to the tunnel. Surprising amount of that heat comes from just putting the brakes on these subway cars themselves.
Yeah. I got to say, the biggest irony of it all was I finally felt cooler temperature-wise when I came back to Dubai after my London break. Bloomberg's weather and climate reporter, Joe Wirtz, thank you so much. All right, well, this is our top story of the day, and it has to be the top story of the day because the internet has lit up after Taylor Swift and Travis Kelce announced their engagement. It's a love story, everybody. The news has already caused a betting boom on several websites and sparked certain articles of the couple's clothing to sell out. Bloomberg's Tiwa Adebayo has more. Well, it's the talk of the town, as viewers of Bridgerton would say. What stood out to you about the announcement, the staging, the dress, the flowers, all of it?
Well, Joanna, a number of things stood out to me, but definitely the first thing that caught my eye was that ring. I mean, experts are saying it's an 8 to 10 carat diamond. It's a mined old cut. But the interesting thing I think here is that reports are saying it was bought from a company that specializes in ethical gemstones. So it's a love story for Taylor Swift, but is it a love story for the diamond industry? We've already seen a lot of talk in the industry of this growing fear around the lab diamond market and ethically sourced diamonds. We saw earlier this summer, De Beers actually abandoned their project to start selling lab diamonds, and that came after Anglo American, their owner, said they're going to have to let them go. So it's thought that perhaps Taylor Swift could set a trend, perhaps, of ethically sourced stones. There's a lot to see for the diamond market and the jewellery market more broadly. That's definitely something that caught my eye from the announcement.
Well, not just the diamond market. I mean, she is a very, very savvy businesswoman. Even the dress that she was wearing was sold out within minutes, apparently, her Ralph Lauren dress. What are the potential commercial opportunities for this couple?
Absolutely. Well, I'd say the opportunities are endless. And in fact, it's probably just down to the couple themselves in terms of how much they want to commercialize this opportunity. You mentioned the dress. It was from Ralph Lauren. The Cut is reporting that it's sold out. Buzz about other items of clothing she was wearing, including a Cartier watch, had Louis Vuitton sandals. There are people trying to get their hands on all of those items. But if there's one thing that we do know about Taylor Swift, she doesn't really do anything by accident. I think we should all be looking at the timing of this announcement. It comes shortly after she announced another studio album within the promotion cycle for that. And also Travis Kelce this morning announcing a partnership with American Eagle. So perhaps the couple will be looking to kind of maximize the business opportunities with regards to this announcement.
Bloomberg's Tiwa Adebayo, love it. My top story of the day. Well, coming up, we'll be speaking to the CEO of Volvo Cars on tariffs, EVs, and production plans. That's live at 10:40 a.m. London time. Up next, Bloomberg Brief. This.